Hey guys, welcome back. Well, today it was a great day to make a video. Wouldn't you agree? The performance that we saw today was outstanding. It's exactly what we've been talking about in this channel, mentioning all the signals that have been in the market the whole time. Nothing has changed from today versus yesterday. The demand is still significantly outstripping the supply. The fundamentals of these companies, the memory sector, are still incredibly intact and rock solid. But today, they were significantly rewarded while they were facing pullbacks in prior day. Why did capital rotate into the sector today? Why did the sentiment change? I think it all started last night. It started in yesterday's video when I mentioned right from the get-go that the Seagate differential, the signal that we saw in Seagate's earnings, everything that they drove, everything that their CEO mentioned, it just confirmed the memory sector overall. And then at about 7 p.m. my time, 9 a.m. Korean time, Samsung dropped their earnings on the street and everything just changed overnight. We saw the sentiment immediately change in the after hours, heading into tomorrow, into this morning's gap up. And it was an amazing gap up that we saw, not only with Micron, what we saw with SanDisk, Western Digital, Seagate, and SK hynix as well here, their ADR here in the US. Fabulous day across the board. Was it a dead cat bounce like some people mentioned? I don't think so, and I'm going to dive in and show you a lot of data why I feel that way and why I feel that this rally is the start of a bull run again for the sector. The demand, guys, is just too good. Everything we're seeing in the market, the signals just confirm it over and over again. And that's exactly what we're going to talk about in today's video. I want to dive through the performance that we saw today. I want to show you the earnings, the two big ones that we saw today with Apple and Amazon, why they confirmed the memory sector. And then I want to show you what's happening in the after hours with the Fab 5 right now so we can anticipate what it may look like at opening bell tomorrow. Finally, there's a few signals that I pulled up again, that just confirms where this trade is going in time. So tons of data to cover. You could tell I'm pretty excited about the performance that we saw today. And I'm sure all of you are as well, because it's been a rough couple of weeks. But we can celebrate tonight. We can cheers each other tonight because our conviction has stood tall. This trade is back, in my opinion. We're going to continue to see strong momentum moving forward. Let's get started. If you haven't done it already, though, make sure you hit like. Make sure you subscribe to the channel. Join this community. We cover in depth every single day, every aspect of the memory trade. We don't just focus on one company. We cover them all. We look at the signal for this trade, what it means moving forward. So you don't want to miss the content we cover on the channel. Make sure you subscribe. Let's dive in. Let's start off what we were talking about last night. Let's start off with the signal, in my opinion, that kind of started it all. Just this differential. Seagate dropped their earnings. And it immediately, I think it just shifted the sentiment. When we saw the extent of their earnings, their forward guidance, the demand they were driving in the market, and we put it all together and said, wait, this doesn't operate in isolation. This HDD demand, this cold storage demand goes right along with all of the other players in the memory architecture. And that's what we saw. That sentiment started to change. It's all based on these earnings. You can look in the title here. It says Seagate Technology surges as earnings silences AI doubters. All based on a few things. And I'll go through it quickly. It says their Q4 fiscal report, it offered a resounding answer to the doubters, to the bears, everybody that's been bearish on this thesis. Guys, I haven't heard much from the bears today. They've been out loud and proud over the last couple of weeks, but really been quiet today. So let's not pound on them too hard, but today is definitely a day for people with conviction in this trade, for the bulls, we'll say, because today was a strong day. And Seagate's earnings, they just started that sentiment shift yesterday. You can see here the Seagate's results show that the storage boom is intact. Seagate delivered earnings well ahead of consensus of revenue and a consensus on revenue that climbed nearly 50% year over year. If I scroll down to a couple pieces, it was the guidance moving forward. They guided for revenue of around $4.1 billion for the current quarter, comfortably ahead of the $3.78 billion analysts were expecting. And they also proved that the rally can last. This is the piece. Seagate's latest earning report has done exactly what it needed to do. It did exactly what the sector needed it to do. It showed that the storage boom is not running out of road. It's not slowing down. It's not losing steam. That's exactly what this earnings report needed to show, what it did show, and also what the Samsung report also showed just drove sentiment crazy. So this is the report. I dropped it in a post last night. And if you guys remember, I said, is this a strong enough signal for all of us? Because if it isn't, I don't know what can be. But we know when Samsung dropped their preliminary earnings, it caused a bit of pullback. It caused anxiety because it mentioned that it just missed the number that analysts were expecting to. So we needed to see the breakdown in the earnings, and it's exactly what we saw. And you could see in Samsung's, their DS unit, which is the memory unit, it delivers 99.7% of Q2 profit amid the memory boom. And HBM4 revenue is reported it's ready to triple in Q3. So scroll down through some of the other details. And this shifted. This data, when it hit the street last night, you saw the after hours shift. You saw the momentum completely turn, racing towards that opening bell and jumping out. And let's just show you exactly what that looked like. Take a look at here. This is Micron's opening run. Here's where we ended on Wednesday. Boom, look at the opening bell and just look at that conviction. Drive it all the way up and just continue to drive it throughout the day. Guys, that was all based on what we're seeing here, what Samsung dropped, what Seagate started, what Samsung confirmed in the street. They mentioned, as I said, the DS division accounted for 99.7% of their total operating profit in Q2. And it was the operating profit had soared more than 250-fold year over year. The Q2 revenue was 171.5 trillion won, up 28% quarter over quarter, primarily driven by this device solutions division, which the sales rose 56% quarter over quarter. The memory boom came with a downside, though, for Samsung. And this is why we saw them kind of miss their number, what the analysts were expecting, because it was driven down in the memory prices essentially drove up the component costs, and it hurt the company's Mobile X experience, their MX division. They posted a $700 billion operating loss, making it its first quarterly loss on record for the company. Now, they went on to say that they expect the memory shortage, that crunch to intensify in the second half of this year, as surging demand for AI server DRAM, enterprise SSDs, and HBM far outweigh the weakening mobile and PC demand. They're forecasting a supply shortage in AI memory that will worsen next year. We've seen Samsung say this many times, that 2027 is going to be probably the worst year, as demand continues to far exceed supply capacity, and the imbalance is expected to persist through 2028. So Samsung expects their HBM4 revenue to more than triple quarter over quarter in Q3, accounting for more than 60% of total HBM revenue in the second half of this year. And the other piece that was a great signal is we know that SK hynix, in their earnings, they mentioned that their DRAM average selling prices were up by 30% and 50% for NAND. We're seeing in Samsung's report, they're also confirming that average selling prices have climbed by the mid 40% range for DRAM and the high 60% range for NAND compared to the previous quarter. They also mentioned that their DRAM shipments, I didn't highlight it here, is up more than 10% from the previous quarter, while NAND shipments rose by a low single digit. And this is what I posted last night. It covers everything I just mentioned. And like I said, if this wasn't a signal enough, I don't know what could be for anybody out there that doubts this sector, that doubts the long-term strength of the memory sector or the players like Micron, SK hynix, Samsung, Western Digital, and Seagate. And SanDisk, sorry. So let's jump over and just see what impact it actually had on today. Guys, this table I love. I love when I created it. Not only we saw this momentum brewing, it was bubbling up. It was ready to explode. Like I mentioned many times, these stocks, particularly when I said it with Micron, was just like a coiled spring. It was ready to explode when we got the right catalyst. And the combination of Seagate as well as Samsung, it was just enough to release that tension, to let that spring explode. And that's what we saw today across the entire sector. Just look at the performance. Micron closed the day on Wednesday at 739. Today, they closed at 874, a gain of almost 18.5%, $136 on the board for the stock. Let's see what it's doing in the after hours in a moment. But look at the rest of the performance. SanDisk, up 26% today, $264 a share, closed at just about $1,277 a share. SK Hynix, the ADR, it jumped up 17.5% today, $22 for that ADR on the board, closed at 149. Western Digital up over 15%, $70 more on the board. It closed at 532.81. And finally, Seagate up over 11%. Now, we know Seagate differentiated itself yesterday, so it had more gains yesterday when these other stocks were down, but another 11% today. Closed at $851.68, $87 gain per share. This was a fabulous day for the sector. Congratulations to each and every one of you of shareholders out there. You had to love this performance across the entire sector. And to answer the question, was this a dead cat bounce? First off, I don't think it was a dead cat bounce because you see this amazing growth across every aspect of the memory sector. But when I take a look at the NASDAQ 100, you see it across all the names in the AI hardware trade. So this just wasn't a dead cat bounce from Micron or another memory player. We are seeing Microsoft up by 15.5% today. AMD 13%. ARM was up over 7%. Intel up over 11%. Marvell up over 12%. The picks and the shovels. Look at Lam Research on top of what they did yesterday. 18% growth today. ASML up 6%. We saw Amazon up almost 4%, doing more in the after hours right now after their earnings today. But guys, this was across the board of all the stocks that are related to the AI infrastructure build out. They have just been pulled back too far. And today was a time the capital rotated back into them. We got certainty around the Fed not increasing interest rates. And we just saw the confirmation signals that we needed to see from all the hyperscalers now that this isn't slowing down. So it just drove sentiment positively for us, and it drove capital right back into this entire trade. So I don't think this was a dead cat bounce. I think we're going to continue to see strong performance tomorrow, heading into the weekend, and hopefully close with a strong note that we can build on as we open up next week as well. But let's talk about the two biggest events we saw today. I was a little bit on pins and needles, if I'm being honest, about what we are going to see with Amazon, what we're going to see with Apple. Would it spoil the performance that we saw throughout the day today? Because honestly, it's kind of the way this trade has been feeling recently. Even with great earnings, we see things get pulled back, but it just feels like there's always a moment where the rug might get pulled out from us as investors, but that didn't happen today. So that was great to see. If I show you the headlines real quick, you see Amazon tops Q2 revenue estimates. They topped their revenue estimates as the AWS, they growth surges. This is exactly what we need to see for all of us that are following the memory sector. This confirms the memory sector, the AWS, the cloud growth that we saw for Amazon. Apple, on the other hand, is pulling back a bit right now. Apple had a different earnings. I actually expected them to be incredibly strong, but my takeaway here from them is I was concerned that Tim Cook was going to mention some kind of negative comment related to a new partnership, a way to compress memory, and it just didn't happen. So this also, we got out of this earnings with the strength for the sector. He talked about rising costs and the memory costs, how it's impacting their products and the prices they have to rise, which could impact consumer demand. It really didn't, though, with the iPhone, if you look at the earnings. And we'll pull up some of those results and look at it together. But these were the two big ones today. In my opinion, they continue to send strong confirmation signals for the sector. Let's look at a very high level of what the earnings showed. You can see and what it means for the memory sector. We'll start with Apple on the left. So their earnings overall, they had a strong quarter, $109 billion, up 16%. Their iPhone did very well, up almost 22% with $54 billion. Their Mac performance was strong. They actually saw a little slower in their China revenue. It was 18 billion. Gross margins, though, were really strong. 51% is exactly what we needed to see from that. As a strong number, and the earnings per share were just over $2. So bullish for memory. The reason it was bullish is both iPhone and Mac demand stayed strong. Record iPhone revenue and strong Mac growth. It increases DRAM and NAND demand across the Apple devices, across their ecosystem. We know how many customers they have linked up to their devices. So to stay strong in those sectors, to stay that we're seeing strong demand, consumer demand for their products, is a great sign for memory. The bearish side of it is the supply constraints. Obviously, Apple highlighted ongoing kind of memory tightness, which could limit volume growth in future quarters, and also the margin pressure potential. So memory costs remain a headwind for them, and it could pressure margins if cost inflation persists. But overall, I would give this a bullish review for the memory sector. It's pulling back Apple right now. If you look in the after hours, last time I saw it, Apple was down by about 6.5% almost. They were down today, I think, by almost 1.5%. So they're pulling back in the after hours. On the other side, Amazon, we're seeing very strong results. So Amazon's revenue was $200 billion, is up 20%. AWS revenue was $42.2 billion, up 37%. That's a huge sign and a positive signal for the memory sector. If we jump down to capital spending, so they're actually increased their CapEx spending to $222 billion. I think it was 200, so they're moving it up a bit. That's another positive confirmation sign for the sector. Free cash flow was down. It was negative $7.6 billion. So even more pushed down than we saw with Google. This is probably the one bearish side of the report for memory, because we're going to continue to see some anxiety around this spending and the ability for it to just drive return on an invested capital. But their net income was roughly about $62 billion, and this included the Anthropic gain as well. Bullish for memory because we're seeing AWS growth accelerate. Revenue grew by 37%, the fastest pace in several years, driving strong demand for AI infrastructure. We're seeing no slowdown in their spending. They actually increased, their management affirmed their plans, increased their CapEx to $220 billion in spending, and they are indicated for a strong continued AI build out. And then the infrastructure investment continues. Amazon is aggressively investing in data centers, supporting that demand for HBM, DRAM, NAND, and HDD storage. The negative side will be the negative free cash flow and just that pressure that they could face for investors with return on capital. Those were the big earnings that dropped after the bell. So let's see what it did for the sentiment for the memory sector. We're seeing Micron continue to move. If you just look in the after hours, it's up another 4%, climbing right now towards $911 a share. We've gotten back over that 900 share. Let's see, watch this momentum overnight and see if it'll keep climbing. But it was a fabulous day for Micron. SanDisk, look at this, 7.5% almost in the after hours, up almost $94. The stock is closing in or getting close to $13.75 again. We'll keep our eye on that, but that's a great sign to see. And remember, both SanDisk and Western Digital have their earnings next week. That's another catalyst, and I predict that both of those are going to be incredibly strong. Not only move these companies, but they're going to move the entire sector even further, just like what we saw with Seagate. Western Digital up another 5.8%, close to 6%, another $31 in the after hours. The stock is at $563.80 right now. And finally, let's round out the group with Seagate. Seagate is up $87 today, another $31 in the after hours, another 3.7%. The stock is pushing $883 right now. Great day for Seagate. So thankful they started this run and got it going. SKHY also up 17.5% today. In the after hours, 7% right now, another $10. That ADR is closing in on 160 in ADR right now. Strong day across the board. So many strong signs for the sector. But let's finish with a couple more signals before we wrap up this video. It just gives us a view of where we're moving forward. And I promise I'll be quick with these three. Look at Lam Research. They raised their wafer outlook as AI drives NAND, DRAM, and advanced packaging demand. So if we go through, we mentioned here, a key driver has been the resurgence of NAND spending, according to their CEO. Lam said that NAND revenue more than doubled sequentially as manufacturers upgrade existing fabs to 256 layer and above devices for enterprise SSD production. Great sign for Micron, great sign for SanDisk and the other players in the NAND space as well. AI applications are requiring larger context windows and more persistent memory, and persistent memory are significantly increasing flash storage demand. Lam Research is expecting its served available market per wafer in NAND to double as the industry transitions from 128 layer to the 500 layer devices. They also showed continued momentum in DRAM. Spending focused on wafer additions and node migration supporting DDR5, LPDDR5, and high bandwidth memory. Advanced packaging for Lam was another major growth engine. Lam expects revenue from the segment to grow more than 70% year over year, supported by rising demand for HBM, HBM integration, architecture, chiplet architectures, and panel level packaging. And finally, they mentioned that they have confidence that 2027 will provide another strong growth year as the semiconductor fabs come online. So that's one signal. The second signal was around Samsung locking up long-term arrangements like we have seen with Micron and we've seen with SK Hynix. I want to just show you this quick graphic that they down here have mentioned up here, because it's Samsung's long-term arrangements in focus, allocation, customers, and more. Guys, this is the future, what we're seeing right now for this sector, just giving more and more revenue visibility for these companies, locking in pricing floors, making sure that prices don't go down. And it's not just DRAM, it's NAND as well. And that's what Samsung is mentioning too. You can see long-term allocation, Samsung is shooting for 60 to 70% of their capacity to be locked up in long-term agreements. Micron is 50% of sales. SK Hynix is not disclosed. Reported customers, Samsung has locked up arrangements with Amazon, Microsoft, Google, Meta, and rumored to be Oracle. Micron, we know, has Tesla, Qualcomm, GM, Ford. SK Hynix has big techs, rumored with big tech companies like NVIDIA, of course. Samsung has rolling 5-year renewal contracts. Micron is a 5-year automatic, 3-year. It's 3-year automatic, 5 years. SK Hynix is 3 to 5 years. And for just right now, we know in progress, Micron has 16 arrangements signed, SK Hynix 10 long-term arrangements signed, and Samsung has 5 signed and 5 more pending. This is the future. This continues to lock in revenue visibility for the sector. And then the last one I want to give you is just another confirmation around Advantest. They're mentioning that the forecast for chip demand surges. The biggest piece I want to call out here is this. They're expecting the investment cycle to continue. It's supported by applications such as physical AI that will continue for several more years. So they mentioned in this paragraph, you can see that inference workloads are moving. That is one of the reasons they are seeing stronger than expected demand. It is the AI, the inference AI related segments is the main reason for their upgraded outlook overall. This is the shift we've talked about, moving beyond data centers, moving into the agentic phase, moving to the edge with robots, autonomous vehicles, and more. So these are all great signals, but guys, it was a fabulous day today. I hope you enjoyed this video. I hope you enjoyed the price action we saw today. What we're seeing in the after hours right now has me even more excited. More to come for this sector. It is not dead like people said. It was not a dead cat bounce today. It's just confirmation that the fundamentals have been incredibly strong. The demand signals have been incredibly strong. And finally, these stocks are being rewarded. More to come. Hope you guys enjoyed the video. Drop your comments below. Let me know what you thought of today's action, but I'll see you in the next one.